Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to our latest episode of the Market Misbehavior podcast. Recently at the Money Show in Orlando, I had an opportunity to sit down with America's Economist, Mark Skousen. Mark is been in the financial industry, been on Wall Street for 50 years now. In 2024, he's currently a professor at Chapman University in California, although he's held a number of prestigious roles around the street. My conversation with Mark was a lot of fun. What a thoughtful, genuine human being who just has a wealth of knowledge about economics and market history. We talked about his 50 years on Wall Street, lessons learned, talked about inflation and the return of inflation. He shared with me what he carries in his pocket as a constant reminder of the power of inflation and where your opportunities may be. We talked about his newsletter, Forecasts and Strategies, that has helped so many investors navigate the markets in periods of uncertainty. We talked particularly about what sort of areas where he was seeing opportunity here in October of 2024, particularly using his Flying 5 portfolio, which is a group of stocks that he selects for his newsletter. We talked about his book, The Maxims of Wall Street, which really is a repository of market wisdom anecdotes from top market practitioners. We talked about a market outlook between now and year end, how to think about the election season, how he is sort of trying to get ahead of that in his own portfolio and watch list. And finally, we talked about risk management. How do you talk about or think about risk management in a period like now when it feels like conditions are so good, when your portfolio probably is sitting on some decent gains? How do you think about risk right about now? It was a lot of fun. What a thoughtful and again, just a very knowledgeable person to sit down with. Here's my conversation with Mark Skousen, America's Economist. Welcome, everyone here at the Money Show, and thanks so much, Mark Skousen, for sitting down with me. Skousen, I apologize.
No problem.
It's so good to meet you in person. I've read about you. I've read your books. I'm familiar with your newsletter, and it's such a pleasure to sit down with you and get to know you a little bit more. I just learned as we were preparing here, you've now hit 50 years on Wall Street. Can you just talk a little bit about what that journey has been like and what changes you've observed from 74 at the major low to 2024?
Yeah, I think you were just pointing out the stock market at a low at that time. And
That's
of course,
right.
This was the inflationary 70s, and I actually started as a managing editor of a newsletter called the Inflation Survival Letter. And talk about misbehaving. That was a letter that was in the hard money movement. So stocks and bonds were anathema back then. It was in that long-term bear market, at least for the Dow. The NASDAQ stocks actually did pretty well in the 70s. It just just getting started. But our focus was on gold, silver, and Swiss francs. Mm-hmm. And as a matter of fact, I keep in my pocket, I'll pull this out because it's a gold coin. Nice. I keep this on me at all times to remind me of my roots.
There we go.
So my first investment was a gold and silver coin.
Wow.
Not a stock or a bond.
Right.
And in some ways we've come full circle in terms of a return of inflation, although I don't think it was anywhere near what it was like in the 70s where you had double-digit inflation.
Yeah.
And the dollar was collapsing and all that sort of thing. And interest rates were, in real terms, rather negative. So there's lots of reasons why the 70s and today's 2020s is not the same. Yeah. But you have had a return of inflation to some extent. Mm-hmm. So it has been a very tough business to beat the market. I remember, 1975, I believe, is when Jack Bogle came out with the Vanguard Fund.
That sounds about right. Yeah.
And the S&P 500 index fund. And that was near the bottom, really, in many ways. Although the stock market, most people don't consider until the 80s. But I actually made a significant change and started my own newsletter. So I started as managing editor of the Inflation Survival Letter. Okay. And in 1980, I had a chance to go out on my own and start my own newsletter, which is called Forecasts and Strategies.
Still being published today.
Yes. Yep. It's supposed to be gold, although my publisher keeps
a yellowish
publishing
color.
it yellow.
Okay, that's fine.
And I've never been yellowish about the markets. It's called Forecasts and Strategies. So I make a forecast and then a strategy.
Yeah.
But in 1980, When Ronald Reagan became elected,
Yeah.
I saw a sea change, a paradigm shift. And the paradigm shift was back to traditional investing in stocks and bonds and selling your gold and silver and focusing on more traditional investments.
Right.
So I was kind of excommunicated from the gold bug business. I went to the annual New Orleans conference, which, by the way, is celebrating their 50th anniversary this year.
That's a long-standing investment conference, right? Every year in New Orleans.
I will be going to that.
Oh, fantastic.
And I was there almost from the very beginning. And so I hold on to this gold coin, which is a Mexican 50 peso, by the way.
Wow.
So the 50 is memorable.
Oh, it's perfect.
And it's 1.2 ounces of gold.
Very
so it's
nice.
the largest gold coin that is minted as a bullion coin.
Wow.
So I like to do that. I also like to do that to kind of go after Donald Trump, who's always been negative on Mexico. Do you realize the other day, this is the other thing, we don't necessarily want to talk politics, but his idea of America first and we're not going to import any cars from Mexico and stuff like that. His protectionist measures, I think, are extremely dangerous policy to globalization and the benefits we've gotten from globalization. It does change. There are dynamics, and you do lose jobs, but you also gain jobs. And on net balance, globalization and free trade is a good policy. And I think it's kind of tragic that he's setting our country back 100 years, because you go back to 1930, and Smoot-Hawley did not help, made the Great Depression worse. So I don't know your feelings about that, but I think that's, I like deregulation, lower taxes, that sort of thing. But his attack on free trade and in favor of tariffs, I think, is a major blunder.
It's interesting right now, obviously a very contentious election season. It's becoming more and more, heated and uncertain. How do you advise people to invest and manage through a period of uncertainty like we're experiencing right now?
Well, first of all, I'm fully invested, so I'm not a contrarian at all of going into cash and thinking that the market is about to collapse and that sort of thing.
Right.
I can't. One of the things I've learned over 50 years of being on Wall Street and writing an investment newsletter is that the doom and gloom, the prophets of doom, which are everywhere all the time, they sucker in a lot of investors, and I think they've missed out on some tremendous opportunities in traditional stock and bond markets. Right. I think we're still benefiting from the Reaganomics era, and so if you look at my portfolio, I do have a gold position.
Okay.
I do have a blockchain position.
Right.
Cryptocurrency, Bitcoin, or whatever you call it. But those are small positions because I want to be invested in successful businesses. One of the things I've learned also is that America is the American exceptionalism is still very real. We've outperformed every stock market, every country fund in the last 100-some years, and it's still the case. There's
still working. There's
no other country fund that is really performing as well as the U.S. economy, U.S. stock market.
Yeah. One of in your newsletter, I know you talk about your the Flying Five portfolio. Can you talk a little bit about what that is, how you identify things to put in that portfolio, and what that has been like recently?
So I came up with this idea. My newsletter's for more conservative investors. Okay. I do have some trading services that do short-term speculation, but the newsletter itself is pretty long-term oriented.
Sure.
And a lot of my investors, who are my investors? Well, my subscribers. Well, they tend to be more conservative, older people. So I stress dividend-paying stocks.
Sure.
I stress companies that take a conservative, long-term approach. I mean, I must admit, I do have one stock that's up 50% this year. It's called the Williams Company.
Oh, yeah, right. Yeah.
Which is a natural gas pipeline company.
Yep.
It's up 50% this year, so that's unusual for me, though, to have that kind of performance.
Why not, though, right, if you can get it?
But one of the things I do is this Flying Five strategy. So I go to the 30 Dow stocks, and I say, well, which ones do I think are the best performers? They all pay dividends, which are important because for conservative investors, mature adults, a lot of them are interested in income, so dividend-paying stocks are a way to go. I don't particularly like bonds because you limit your upside potential there.
Yeah.
I like rising dividend policies. So I kind of went to the dogs of the Dow contrarian strategy initially in the early 1950s when John Dunn and others were promoting this idea of maybe high dividend, low price Dow stocks. But they're Dow stocks, so they're blue chip. But it kind of fell apart during the financial crisis, like 2008. Bank of America stopped paying the dividend, and GE stopped paying a dividend. I thought, wow, these are Dow stocks. So I decided to be more selective than doing a mechanical high dividend, low price Dow stock. And so I decided to do some fundamental and technical analysis.
I love it. Okay.
On the Dow stocks, and I came up with 5. So my current 5 include Goldman Sachs, Caterpillar.
Sure.
I have IBM in there. IBM has finally come alive.
It's actually, it's starting to work. Yeah.
Yeah, can elephants dance is the old phrase, and they're dancing because of AI.
Yeah, yeah.
So I have that one as well. And Walmart. Walmart, the profit margins are increasing, and they're doing a lot with online.
Yeah.
So I have, these are all done well. And the final one, I wanted a health stock, so I have Amgen.
Okay.
But it's my lowest performer. It's only up maybe 7 or 8% this year. It hasn't done as well as I was hoping. But that's not bad. 4 out of the 5 beating the market.
It's not bad at all, actually.
And so,
for a concentrated portfolio like that, too, right?
Exactly.
With the 5 names. That's excellent.
The other thing I have is a stock that people may not have heard of called Main Street Capital.
Okay.
And it is a business development company, which means it's a private equity. It invests in companies that are not public. They're private companies, they're franchises, they're family businesses, and they take an equity position and a loan position, equity, and they invest in with the bond type of portfolio as well as an equity position. Main Street Capital is I believe it's the only company, MAIN. You can't forget the
Great
symbol,
ticker,
Main. In fact, all around the world as I travel, I see Main Street all the time, and it reminds me of Main Street Capital. But I believe, correct me if I'm wrong, it is the only stock that pays a monthly dividend and a quarterly dividend. Is there any stock that you're aware of that
not
does?
that I've heard of. No, that's unusual.
Some of them pay monthly dividends. There are a few of those.
Sure, yeah.
But they also have a supplemental dividend every quarter.
That's good.
Because they have to pay out 90% of their earnings in dividends. So that's why they add a supplemental dividend in order to stay with that. But together it's yielding 8% right now.
It's not bad.
And it's already up 30% this year. 25 to 30% this year. So it's a relatively small private equity firm, trades publicly since 2007. And it's just been a big winner for me.
That's fantastic.
So I like that. Plus, finally, energy. I have the Williams Company and Enterprise Products Partners.
Okay, yep.
Both pipeline companies.
Pipelines.
One in oil and the other in gas. And those have been big winners for me as well.
Your book, The Maxims of Wall Street, I think was brilliantly done. I mean, just a great sort of repository of Wall Street wisdom and all of that.
Yeah.
Any, anecdotes or anything from that book that you think are relevant to investors in the present day?
Well, I'll tell you, first of all, I started collecting these sayings on Wall Street in 2011.
Okay. And
Alec Green, who writes for the Oxford Club, gave me the title, you should call it The Maxims of Wall Street. So I started publishing, and I went to Wiley, who publishes all these financial books, right?
Right.
I said, Wiley, you've published some of my books before. How about you guys publishing The Maxims of Wall Street? He says, Mark, gift books don't sell and quote books don't sell. And 50,000 copies later, I like to call them every Christmas and say, by the way, I'm up to 50,000 copies. And surprisingly, there's no other quotes there, like sell in May and go away and don't come back till Labor Day.
Yeah.
But there are some really in-depth ones, like nobody is more bearish than a sold-out bull. And if you think about that,
that's good.
because there's confirmation bias that goes on. There's a lot of cynicism in this book as well. Wall Streeters are very cynical. For example, what's the definition of obscene profits? Do you know what the answer is?
No.
It's something you always hear about but never experience yourself. So one of my favorites is nothing makes the spirit fly higher than finding a bargain when you're the buyer. And nothing makes the spirit sink deeper than finding it later a whole lot cheaper.
Oof.
So that's the cynicism
that
you have in there. I have a whole, it's not just quotes, by the way. I have little short stories as well.
That's great.
Like Joe Kennedy, the story that he decided to sell the stock market in 1929 when he found that a shoeshine boy was recommending stocks for him, stock tips. So there's a whole I divide it by categories. So it's not just a bunch of quotes. So there's fundamental analysis, technical analysis, bull markets, bear markets, dividend-paying stocks, gold, government policy. Some short stories in here.
That's
I have
great.
These words of stories, little parables of wisdom and that sort of thing. I have a section called How to Become a Millionaire. Well, the old saying, you start with 2 million. I'm sure you've heard that before. But there's another one from Forbes magazine. How do you become a millionaire? Marry a millionaire, or better yet, divorce one. So, and then finally, one of great wisdom by Jack Miller, who was an old real estate guy.
Right.
Jack Miller said, you want to make $1 million? Borrow $1 million and pay it off. And that's the mortgage.
There you go.
Monthly mortgage, you pay it off, and homes are $1 million now. So if you have $1 million mortgage, you pay it off. You got a home with equity and hopefully more than $1 million.
That's awesome.
So anyway, it's a lot of fun, and people can. It's called the Maxims of Wall Street. They go to skousenbooks.com.
Yep.
They can get it at a discount, or they can get it on Amazon as well.
No, thanks so much for writing that and sharing all those with all the investors out there. Let's talk a little bit more about the current market environment. The market, at or near new all-time highs here in October 2024. The market appears to be pricing in sort of this soft landing. Everything's going to kind of work out. Economic growth. Do you buy into that sort of optimistic feel about the market conditions, or do you see signs to be concerned? I know you're a trend follower, and the trends seem positive to me.
But also politically, Trump is now leading. I believe there's a very good chance that Trump will actually be the next president.
Right.
And he is a very... He's pro-business a lot more than the Democrats are, who are constantly wanting to attack the entrepreneurs and the rich people, and they gotta pay their fair share. Well, at what point do we want to go back to 90% marginal tax rates? We really want to kill the entrepreneur spirit?
Right.
I'm really concerned about that sort of thing. I mean, Kamala Harris talks about the opportunity economy, and I think that's great rhetoric, but then what will her policies be? And I think people, they know what they're getting with Trump. We do know that. But we really don't know what we're getting with Harris.
Sure.
And I think that's bugging a lot of people. So the odds makers are now saying Trump has a good chance of winning. Who knows? But I will say that we are entering that first year of a new president, right?
Yeah, yep.
And that's the lowest return of the 4-year presidential cycle.
Yeah, the presidential cycle. That's absolutely right. Yeah.
And a lot of times you have a sell-off during that time period, and that could happen. As I tell my friends, these technology stocks should fall in half and they'd still be a bargain, right? NVIDIA would be a bargain at half its price.
That's probably true.
Yeah. So there is room for a serious, but it would have to be some kind of a serious problem, where this recession that we keep talking about actually occurs.
Yeah.
And we start in a not a depression, but a recession. You could have a sell-off.
Yeah.
And so I've been through the sell-offs before where the market fell 50% in 2008 and fell 30% in 1 month in 2020.
Yeah.
And it's easy to panic. And so I do like what J. Paul Getty said, that this is a bargain opportunity because the American economy, as long as we encourage entrepreneurship, and I mean, if you look at the 5 biggest companies in the world right now, what are they? Well, Amazon.
Yeah.
Microsoft,
yeah.
Apple,
Yep.
Facebook.
It's the Mag 7 names, right?
Yeah.
Yeah.
They're all U.S.-based companies,
that's true.
worldwide.
Yeah.
And so that American exceptionalism is still very much alive. And as long as, Republicans and Democrats in Congress, they work overtime to try to kill that
Yeah.
with all excessive regulations, excessive taxation, but they haven't been able to do it for whatever reason. So
it's still working,
as
right?
a bit of a cynic in that respect,
Yeah.
I would like to think that we will continue to have that. But
Yeah.
I mean, there's always the uncertainty. Bull markets climb a wall of worry, right? That's in the Maxims. Right?
Absolutely. Yeah. Classic.
And so we have plenty of things to worry about. And so that's why I diversify the portfolio. I have gold in there. I have.
Yeah.
Look, I think there's something real to the cryptocurrency. I have this debate all the time that there's nothing backing them, and you can have as many Bitcoins or as many Ether, Bitcoin, all of these different, there's thousands of these out there.
Coins, yeah.
But I do think it's a winner-take-all market
Yeah.
To some extent. Bitcoin is maintaining that level. Ethereum and others are coming on strong. But I would like to think the blockchain technology is a real technology.
Yeah.
And I'd like to see title insurance disappear. If someday we can have recorded everywhere real estate property. I think there's something to that. So that is in my portfolio.
Got it.
I recommend the transformational data sharing fund. But the symbol is easy to remember, block, BLOK.
BLOK, yep, that's right.
I like that one a lot.
Okay.
And that's in my portfolio, and I have a gold position as well. I've just added a gold mining stock in my portfolio. So I'm diversified, but it's a small portfolio. My main focus is on individual stocks.
Yeah.
But I do think that we need to be a little more cautious now that markets have hit all-time highs, and we have kind of a soft landing type of situation.
Well, so I was going to ask you.
The Fed is doing a decent job, I think.
So I was going to ask you about, obviously, a lot of investors are sitting on some probably pretty decent gains here in October of 2024 after, gold has outperformed the S&P and the NASDAQ. It's done quite well.
Yes,
but kind of
that's true.
everything's been working.
Yeah.
How do you think about risk and risk management at a time when it feels like everything's sort of good? Is it through diversification? Is it through thoughtful positioning, stop losses? How do you do it in your own efforts?
I wonder if there is some value to experience being in this market through bull and bear markets and boom and bust and all of the things that I've experienced in 50 years. And it has reinforced my optimism that things are doing well, especially in the technology field. Yeah. I think that there's real possibilities. But as Cathie Wood has demonstrated, you can be a little bit too early.
Yeah, right.
And those ARC funds have been devastating.
Performance has been meager.
Yeah,
right?
She became the hot person on Wall Street, and that was the topping out. So we don't want to be ever complacent. I'm having a debate with a technical trader who believes in timing the market.
I was going to say it's sort of it's the economic professor versus the
with
mathematician.
Mike Turner, who's
Mike
developed these technical AI type of models and stuff like that.
Yeah.
But I've noticed he's always had to revise his model that because human action, you got to remember the stock market is not a machine. Even though there's a bunch of computers behind it, it's humans that develop those models, those computer models, and that software. And so I'm skeptical of that sort of thing, that you can really do that and do that consistently. So the best strategy that I found in the Maxims of Wall Street, the Peter Lynch's of the world, the Warren Buffetts and so on, they tend to look for buying good companies with good management for a good long time. I'm quoting Adrian Day, who's a gold mining and foreign stock expert.
Yep.
But you want to buy good companies at a good price, at a reasonable price, as Charlie Munger said, and you hold them for a good long time. And you look for those crashes that occur from time to time, or bear markets. I do think the Fed is always alert to trying to keep a crash from occurring with a lot of different methods, the tools that they have now to keep a 1987 crash. By the way, I celebrated my 40th birthday on the stock market crash on Black Monday, 1987.
Yeah, that's right.
So I'm known as a crash baby to some extent. And I've been arguing no more crashes, but they can't stop a bear market.
Right.
So that's generally been my approach. So I'm cautious right now, but I'm fully invested.
Yeah.
And we may take some profits along the way to some extent.
Yeah. As long as the trends keep working, we'll keep following them.
The
right?
trend is your friend until it ends. That's
Perfect
right.
way to end this one. Mark Skousen,
David.
what a pleasure to meet you. What a pleasure to sit down with you. Thanks so much for all you've done and continue to do.
Right,
and we
you.
wish you the best.
Yeah,
all right?
thank you very much.
Thanks, Mark.
All right, bye-bye.
That was my conversation with Mark Skousen, America's Economist. I love that Mexican gold peso that he had in his pocket. He's been carrying it in his pocket for years and years. What a great opportunity to learn from someone. Anytime I have an opportunity to sit down with someone like Mark, who's just had such a wealth of experience, I feel like the battle scars you have as an investor really help you, prepare for the next bull market, the next bear market. Someone like Mark isn't really anxious. He isn't uncertain. He's just gathering evidence and reflecting on how what he's seeing now relates to previous cycles. Because all of those themes about inflation, hard assets versus paper assets, bull and bear market trends, words of wisdom, all of these kind of come full circle. That's the, I think, benefit of learning from the lessons of market history. Arguably, charts are some of the best way to do it. And I thought Mark's comments about how he used charts in his practice were well received. That's it for this episode of the Market Misbehavior podcast. If you like these sorts of discussions, if you want to learn more about how you can learn about investing, particularly using the language of technical analysis and behavioral finance, check out my website, marketmisbehavior.com, and check out my free behavioral investing course. Hopefully you will come out of that course a changed investor with ways to improve about how you think about the markets and some actionable ideas about how to improve your own investment process. For Market Misbehavior, I'm Dave Keller. And remember, it's always a good time to own good charts. Have a great one.